Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. Last week, Bank of Japan intervened aggressively to protect its currency from depreciating. In today's presentation, we are going to understand what impact it can have on different asset classes and currencies. Apart from that, we are going to discuss what is the outlook on dollar rupee pair for coming days. So let me start with the first point. Last week when USD JPY was trading close to 163 level, at that point of time Bank of Japan directly intervened by selling dollar and buying yen. As a result, USD JPY moved from 162.80 to 158.30. Then, as they've intervened in the past, market thought Bank of Japan will not be able to do anything further, and yen started weakening against towards 161 level. So at the end of Friday night, Bank of Japan with US combinedly intervened, and as a result USD JPY moved towards 157 and a half kind of levels. It is not the first time when central bank came together and prevented any currencies to get weaker. In the past also, they have done similar kind of thing. For example, in 1985, Plaza Accord, 1998, US and Japan jointly came together to prevent yen weakening. In 2000, G7 currencies intervened to protect the euro to fall, and in 2011, again to prevent Japanese yen weakening, all G7 countries came together. So what is happening today? Similar kind of action happened in 1998 when US and Japan only came together and intervened and prevent Japanese yen to get weaker. At that point of time, Japanese yen was trading near 147 kind of a level. Both combinedly came and intervened in the market. As a result, initially USD JPY moved towards 138 kind of a level, and eventually, because of many other steps, it moved towards 111 kind of levels. Now the question is, why did US intervene today to help Japanese yen from weakening? If Japanese yen continue to weaken, then Japan, which is highest holder of US Treasury, will come and sell US Treasury aggressively. As a result, US Treasury yield will shoot up, and when US Treasury yield will shoot up, it will increase borrowing cost for US government, US corporates, and US citizens. The second reason for the same can be maintaining trade competitiveness. Today, US is having a trade deficit with Japan close to $64 billion. If yen continues to get weaker, it will make Japanese goods more competitive in the US market. Hence, their trade imbalances will increase. Now the question is, where is USD JPY moving and what impact it is going to have on different asset classes? Now so there can be two possible scenarios. Scenario one is like regency effect. In last 1 year, they have intervened multiple times, but their intervention failed, and every time USD JPY continues to get weaker. So probably this time also USD JPY can take support near the current level and can move higher towards 161 kind of levels. USD JPY can weaker because of two reasons. First, weaker fundamentals of Japanese economy, and second, carry trade attractiveness between US and Japan. The second scenario can be where Bank of Japan and US decide they want to make speculator bleed who are betting on weaker yen. So in that kind of a scenario, they will strengthen the yen from current levels of 157 to say 154 or 150 kind of levels. When they give such kind of a signal that the yen is going to appreciate, then carry trade unwinding will happen, because if yen starts appreciating, it is a loss to carry trade borrowers. Similar carry trade unwinding happened on August 2024 when Bank of Japan increased the interest rate for the first time. At that point of time, their equity market fallen by 12% on a single day. I pray that second scenario do not come. If the second scenario comes, then we will see stock market falling, bond prices falling, US Treasury yield getting higher, EM currencies get weaker, and volatility will be there across all asset classes. Now let us discuss the outlook on rupee. From last couple of days, rupee has got strengthened because of two reasons. Mainly, FIIs came back into Indian equity and debt market, and we were able to raise 40 billion SCNR flows. However, saying that there are several factors which can put pressure on rupee. For example, West Asia crisis is still on and it can take oil to higher level towards 100 kind of level. Second, unwinding of carried trade in Japan can put a financial stress on all riskier assets. Third, rising yield across the world is giving us a signal that the next financial crisis can be because of higher yields and higher debt levels in the world. And last but not least, RBI net short position of $106 billion. Considering all of the factors, we are in a belief that 95.20 to 95.40 is going to act as a very strong support for the rupee, and gradually rupee is likely to move towards 96 to 96 and a half kind of levels. With this, I will end my today's presentation. Jai Hind. Namaskar. फिर मिलेंगे next week. Thank you.